Session on Friday. We did have a good run. The Midcap Index continues its good run. We ended at the highest levels in 2 months on the Nifty itself. Meanwhile, the major indices also did see a good run. Well, hello and welcome to the Editors Roundtable. I'm Nigel D'Souza. With me, we have Nimesh, Anuj, as well as Prashant. It's an all-boys show, and we've got plenty to talk about in the next half hour odd. Hey guys.
Yes, and we got another boy joining us soon, right, as our guest as well. So really a boys club today, and of course we are missing Sonia, but the market's not missing anything right now. Fifth consecutive day. It started with Friday, and I think the sign became clear on Monday when we took out Friday's high after trending series to have two back-to-back solid sessions. And after that, there's just been no looking back. And now what the good thing is, the laggards are catching up. Nifty and more importantly, Bank Nifty.
Indeed. And what about the weekend plans, guys? I mean,
I thought we were going to discuss that later towards the end of the show. Get it over with.
I'm excited for the weekend. What are
the US Open.
US Open.
I'm looking forward to.
Who are you betting on?
I think it will be Alcaraz. I think though Djokovic got an easy draw, so he has got literally free pass to the final. But I'm hoping that Alcaraz gets through to this Medvedev match. If he does, then I think he should be the favorite in the final versus Djokovic.
And
so
Javan?
that's my something to watch on.
Javan?
I have to get past one more viewing of Oppenheimer, and then we'll get to Javan.
I've already seen Javan, by the way.
I have to. Nigel, I think you're going today, right?
What's the verdict?
It's very good.
Yeah.
Oh, sorry, you've seen it.
But yeah, I've seen it. But I'm a diehard Shah Rukh Khan fan, so I had to do it yesterday.
But let's,
No, I have not seen. Now that I have interest in watching Jawan.
okay, let's get to the market action then.
I used this term of Teflon coating, right? I mean, you remember Teflon coating? Teflon coating cookware and pans, and basically it's anti-corrosive material which you spray, right? Which prevents water damage, all kinds of damage. And I think that is a very apt description for what we're seeing in the market right now. Nothing negative really making a dent at all. No corrosion, no water damage, no damage from the sun, no damage from oil, nothing. This is a market which has continued to rally on, and I think that's very, very apt. So just a couple of things to put this in context, right? Just consider the trioca of circumstances. You've got oil, which is $90. Dollar index, which is 105. Yields, which are the 2-year at least, is now 5%. And you got the market, which is rallying on. Now, to be sure, all of those things are high because global growth is also looking good, right? I mean, US especially is looking good. The only sector, the only country which is underperforming in a very significant way is China. So you can't say that there is a crisis. It's just that some of these indicators are not good, especially oil, of which we are a very large importer. But so far, as I said, the coating, the Teflon coating, working very well. They say when markets do well for a long period of time, before they start to do worse off, they do even better. And I think over the last 2 weeks, that is exactly what we've seen. Almost a bit of a parabolic kind of move on the small cap and mid cap indices. Actually, I put in the micro cap index as well. 6.5% in 2 weeks on the mid cap index, 8% on the small cap index in 2 weeks. Basically, what I'm trying to say is the pace is picked up. The micro cap index is up 7% in the last 2 weeks. And I just kind of looked back at the last, when is the last time, especially in the micro cap index, we had a negative weekly close. We've had one. In the last 24 weeks, the micro cap index has had one negative weekly close. So, if you just look at the chart, it looks like a rocket, almost a rocket. So the Nifty previous high is 19,992, and I think we should get there sooner than earlier. 20,000, of course, is a matter of time. At this pace, should happen maybe on Monday, Tuesday, all things remaining same. And I just want to end with valuations once again. And this is the graphic I've presented earlier as well. For the mid-cap index, what I've looked at is the current one-year forward Bloomberg consensus earnings, or PE. We're at 24 times. And I looked at the previous significant peaks. October 2021, the mid-cap index went up to 34 times. We're at just at 25 times. The January 2008 peak, after which, mid-caps and small caps basically went into a dead zone for the next 2 years. We were at 24 times. And the 10-year average for the index is 20.5 times, and we are at 25. So compared to 2021, it looks okay, but we are above the 10-year long-term average, and we are above some of the previous peaks. Small cap index, the same graphic, we're at 16.3 times one-year forward earnings. October 21, that number was 23. May 2018, that number was 14 times. and the 10-year average is 16.1. So basically on the small cap index as well, we are now at the average, the 10-year average as far as the markets are concerned. So you can't say that small caps and mid caps are sort of cheap or they're throwaway prices, not at all. But can you say that they are wildly expensive as well? I don't think so. Nimesh.
So, Prashant, I'll just add to what the market flavor is. One, there is a left out feeling. I've been saying this for a while now that there is so much of cash which is sitting on the sidelines. A lot of smarter HNIs, good investors had actually raised the cash levels, and now they're feeling that left out feeling. This week's rally was purely technical in nature. As you rightly pointed out, there were a lot of negative news, and still the markets went up because the market is light. Even if you look at the PCR ratios and all, we are not like very overbought, so to speak. So, and there is a left out feeling, and that's explaining the move in a lot of broader markets as well. Look at this week's move. A lot of the PSU stocks have rallied with no reasons, right? There is no fundamental reason to justify a PFC REC rallying 10% this week. Mazgaon rallying 20-25% in just 4 days. So this is the phase where we are in. And I guess, given that there is so much of domestic liquidity and people are sitting on the sidelines, every week, maybe market will just keep surprising on the upside till we don't see a real bubble, so to speak, in the broader markets.
Absolutely. And I think one parameter to track is the number of stocks hitting new highs.
Yeah.
I've been making this point. The number of stocks hitting new high on the BSE is now almost 400. When the number starts to cross 500, 550, gets to 600, that is when I think you worry about it. Till now, the market's been going up, but it's not really, I think that's actually Nimesh's next topic as well.
Exactly.
It's euphoria perhaps, not yet a bubble.
True.
So Nimesh, why don't you explain to us?
I'll just go to the wall and explain the numbers, but let me first do a quick dipstick. Three of you all, your take, bubble or we are still in a bull market? Quickly.
Bull market.
Bull market. I think that explains in the numbers as well. Let me just go to the wall and explain as to why this is not a bubble yet. Maybe just seeing an extension of a large bull market. So if you look at the past history and the past peaks as well, right? If you look at the last 4 peaks, the major reason for the market to peak in the last 4 instances was due to the global events. That seems to be not so far in the near term. Even if you look at the past peaks was largely because of the large FPI dominance. Now that has actually changed and reversed. Now we are too much dominant by the domestic flows, and even the twin deficit of India seems to be on the improving side. So those are the past 4 peaks, but that doesn't look like we are hitting the peak yet. Now, even if you look at the valuation, that's the second parameter that I was looking at. In terms of valuations, if you look at the valuation picture versus the US, we are nowhere near the premium to the US market. Even compared to the emerging markets, we are nowhere close to the premiums to the emerging markets, and even to the India's own historical data. If you look at the historical PE, we are still at a discount to the 1 standard deviation to our own history in terms of premium to the previous peak. So again, the valuation picture is not saying any signs of peaking out, at least in the near term. Now let's look at the next picture. I've just looked at the Nifty trajectory in terms of forward PE of Nifty 50 versus the emerging markets and the last 5 peaks. 2008, 15, 20, 21, and we are in 23 now. In 2008, when the markets peaked, the Nifty PE was at 22 times. In 2015, it was 20 times, again 22 times in 2020. We are still at 20 times. So even from the historical Nifty PE, forward PE, it's not looking like we're in a bubble territory. Similar is the point of the MSCI EM index as well. So that's the data I've compiled from DAM Capital report as well as the Bloomberg data. Now, even if you look at the further, the Nifty trajectory in terms of PE, premium and discount PE in the past 5 periods like 2008, 15, 20, 21, and 23. Just look at this data. The Nifty 50 versus 1 standard deviation in the first 5 previous peaks. 22 times, 22%, 14%, 7%. We are at a discount of minus 17%. So even that is not showing any signs of peaking out. Same is the case with the Nifty 50 versus the MSCI EM index. We are still at 45% versus the peak of 65% that we saw in 2008. So again, this data is not showing any signs of a large bubble market, so to speak. Now, if you look at the peak valuations, again, I explained the peak dates and the key reasons why markets fell from those levels. 2008, we had Nifty hit a high of 2688, and the real growth. This is the important thing. The real growth was just 6.8%. Now, if you look at 2023, we are at 19,500 odd levels, and we are at 6.3. So even this picture, in terms of peak dates, when the markets peaked out, and the real GDP is not showing very alarming signs, so to speak. Now, if you look at further, if you look at if you just look at the data, and I've explained the key reasons and on why the markets peaked in the previous 2008 instances. In 2008, the market peaked because of the housing bubble in the US. In 2015, the peak came on the back of US QE ending, China slowdown, and the Greek default. In 2020, it was, of course, everybody knows it was a COVID reason. And in 2021, it was the inflation surge, which led to a sharp fall. In 2023 or maybe in 2024, what could be the reason? Only time will tell. But as things stand, the past previous data doesn't suggest that we are at the bubble territory yet. Now look at the momentum indicators. We spoke about the fundamentals. Now, even if you look at the momentum indicators in 2008, the advance decline ratio, just 1 month prior to the peak, was at 1.6. We are still at 1%, almost 1 in 2023. So just look at the last 5 peaks. Even in terms of the NSE 500 companies, in terms of 52-week highs, 1 week before the peak, in 2008, that was 12%. In 2023, we are still at 6%, which is almost at the lowest compared to the 3% in 2020. So even the momentum indicators are not suggesting that we are hitting a bubble yet. Yes, there is a pocket of euphoria, so to speak, but in terms of are we in a bull market or in a bubble, the answer seems to be we are still in an extended bull market and not in a bubble yet.
Oh, absolutely. Maybe you can call it froth and not really a bubble. Nimesh, thanks a lot for that. Let's put that question to our guest. Andrew Holland is joining us now, CEO at Avendus Capital Alternate Strategies. Andrew, good evening. Thanks a lot for joining us. Andrew, your take on what's happening in the Indian mid-cap and small-cap space. Is it showing some signs of bubble, or is it normal in a bull market?
It's pretty normal in a bull market, isn't it? Because you have, it's obviously a domestic-driven economy largely. So, if all the kind of, effects of the government spending, private capex, and obviously consumption, all kind of working together, then it lends itself to to good volume, good margins, and that's great for small and mid caps. But I think, Anuj, it's one of the things we've talked about many times. In that, whilst we can look at the index, Nifty and sensex, the action I've said is below that. I mean, the index is at about so far this year is about 10%, right? But it's been the themes underneath the index which have really been playing out, and of course a lot of them would be towards the kind of mid and small caps stories anyway. So I think that's the extra momentum that you're getting, for the small and mid caps. But I don't think it's a bubble. I don't think we're there yet. And I think the momentum will probably continue for some time. Despite the fact that there's, it's a pretty messy world out there, and some of the things that Prashant kind of put forward in terms of where the oil price is, the currencies, the problems in China, we're just ignoring for the time being because the momentum's there. That's okay, but we will get corrections, that's for sure.
Andrew managed to get both euphoria and bull market into the same sentence, right? Euphoria in a bull market. Nimesh, that last graphic was interesting. Advanced decline.
The advanced decline ratio.
So what does that mean? So it was 1.6 I noticed in 2008, right?
Correct.
Are we saying that advanced decline peaks to an extreme level, or it drops off?
No, it drops off. No?
It's the latter, right?
It's a latter, right? So, near to 1.6. Yeah, near to 1.6, 1.7, which means there is a lot of euphoria in the broader markets. We're still not there. In 2023, this week's data, still they are at 1%.
So as we move towards the peak, it will start to move up further to 1.5, 1.6.
But 1.6 before 2000
No, in 2008, when the markets peaked, it was almost at 1.6.
The daily advance decline
average. That is very low, right? I mean,
it looks low, Prashant. It looks low, but 1.6:1 actually on an average basis is not very low. On an average, advance decline would always be 1:1. But it's just that when you peak into a bull market, even today, for example, you would have noticed the advance decline by close.
Today was poor.
By close would be around 2:1. 2:1 is a very, very good advance decline actually.
Okay, all right. Well, gentlemen, let's move on then. This week also saw the first instance of the Nifty and the Bank Nifty expiry happening on different days. And on Thursday, we saw an unprecedented action in the Nifty calls. Well, Anuj, you have pulled out some data. Tell us more about it.
Yeah, fascinating data. And let me go across to the wall. We're calling it Khelo India Khelo. That's literally what it's become. The weekly expiries. And now, you know what, I had explained, I think 2 weeks back, now we have daily expiries. And I had explained how Indian options market is now bigger than anywhere in the world, and especially even the US markets and all. Now look at what's happening. This is what happened yesterday, and very nice graphics. Thank you team for this. The 19,650 call made a low of 2.5 rupees, and in 2 hours it was trading at 120 rupees. You know, there are a lot of investors who are struggling to get 10 bagger, 20 bagger, 100 baggers. Here we have some traders who got 100 bagger options in a day, less than a day. The 19,700 call was trading at 75 paise. Yes, 75 paise intraday. That became 75 rupees at 245. And it gets even bigger. The 19,750 call, which had become worthless, 0.05. That's the lowest that an option can go to in Indian market. 5 paise. That 5 paisa option became 36 rupees. Imagine, that was the kind of move that happened yesterday. And it's not as if this was happening on very low volumes, by the way. It's not as if I have picked some random strikes. These were the 3 most traded strikes yesterday. Look at the kind of volumes that were generated in these strikes. The 19,650 call generated a notional turnover of 38.3 lakh crores. 38.3 lakh crores. 19,700 call, 33.4 lakh crores. And 19,600 put, 32.4 lakh crores. There was a time during the day when the 19,600 put had an open interest of 5 crore shares. Now till now, 2 crore shares, 2.5 crore shares open interest was outlandish. And here we had 5 crore shares in open interest in one strike. Now why is this happening? Because earlier the traders were dividing their capital. Look, you have limited capital, right? You're dividing your capital between Nifty and Bank Nifty, because on Thursday you have both the expiries. So you're dividing it between Nifty and Bank Nifty. Now what's happening? Now Bank Nifty's expiry is happening on Wednesday. So you're free from that, and on Thursday you can go all out on the Nifty, and that's what happened yesterday. Now traders will focus only on one index, and every day now you have one expiry or the other, right from Monday all the way to Friday, and the market's likely to go through a volatile phase daily because of this. Now I don't know, I mean, on one hand we have clear-cut instances of disclaimers that 90% of the F&O traders lose money, and on the other hand we have this almost gambling kind of trades happening almost on a daily basis with daily expiry. 90% of the volumes these days are getting generated in the daily options. Nigel, Prashant, Nimesh.
All right, Anuj, thanks a lot for that. Well put. Khelo India, Khelo. I mean,
and this is
startling
really showing up in the BSE stock, right? BSE hit a new high of 1325 today. Yes. Massive rally. Stock has doubled in the last 6 months.
Indeed. Well, time to slip into a short break. Though on the other side, we'll focus on coal India. Well, it's been shining in trade. We'll tell you why on the other side. Don't go anywhere. Oh, we're recording. Well, the Sensex and the Nifty gained for the sixth consecutive session on Friday, ending at the highest levels in 2 months. The Midcap index ends at record highs for the ninth straight session. Meanwhile, major indices also posted the first weekly gain in over 2 months. Holland, welcome to the Editor's Roundtable. Well, is the market in a bubble or a bull run? We also take a look at an unprecedented action in the Nifty put calls, as well as we put the spotlight on Coal India and steel stocks. I'm Nigel D'Souza. Joining me today, all the boys group. We have Anuj, Prashant, as well as Nimesh. Take care. Welcome back. You're tuned into Editor's Roundtable. Well, let's focus on a couple of stocks in the past week or the last couple of weeks that are doing well. Coal India hit its highest level in the last 5 years. And for this week itself, Nimesh, you're talking about PSU is doing well. The largest name on the Nifty does 18-19% in a single week. That's telling you the kind of traction we're seeing on a couple of these stocks. So let's tell you why then. 4-5 top reasons. Thermal power generation, well, that's set to increase. If thermal power generation increases, that means they require more coal. And also, if demand is strong, then e-auction prices will remain strong. So that's point number one. Point number two is, the market share. You'll see renewables, well, the generation is going up there. So the contribution has gone from 12% of the mix to 14%. But thermal power, well, it's holding its ground at around 17%. That's because hydro power out there, have seen a degrowth. So that's the reason why thermal has managed to maintain its ground. The operational update coming in from Coal India was very, very good for the month of August. You had offtake that was up close to around 15%. Year to date as well, it's up close to around 8%. So for all those who are saying that Coal India is not going to deliver growth, it seems they're pretty much on track. Next up, e-auction prices. The fear was that e-auction prices are going to contract. And the premium in comparison to FSA prices had come down to around 50-60%. That's popped back up to around 78-79% odd. So that's good news. From here on, the street expects that e-auction prices will remain firm. And finally, valuation-wise, well, it's holding quite well at around 4.5 times. Moving to steel, well, valuations are never a factor out there because it's about momentum investing, though the valuation picture should come up for you. What are the street hoping out? Well, steel prices globally have bottomed out because the Chinese steel makers are still making a EBITDA loss. When that happens, then it gets some kind of base to steel prices. There's also hope of stimulus coming in there. And there are some signs now that the data coming out of China is improving gradually. We know domestically, Indian steel makers have gone ahead and increased prices, which is good news. And finally, this Chinese exports is the most important factor. That's remained elevated. If China exports more, not good news for steel prices. So if that comes down, then that'll be good. Well, Andrew Holland is still with us. Andrew, what do you make of this space? You have Coal India out of nowhere. The stock hits the highest level since 2018. You have some of these metal-related stocks as well, hoping that China's going to pump prime the economy. Will you play any of these themes?
Yeah, I mean, the Chinese government has really been taking a pea shooter to the kind of problems which they have. And I still think we're all expecting this big bazooka to come out and fire the economy and get both business and the consumer confidence back. Now, if that happens, you're going to see a continued rally in the metal stocks. So I think that's the play that we're looking at the moment. So I think that will continue. But the flip side of that is obviously that that's not great for us, right? Because it means that higher prices of commodities is not good for India. So I think it's whichever way I look at China, I don't think it's a good news story for India in terms of inflation. So I think we just have to watch that space. So it's great for the metal stocks, but I'm not sure it's great for the economy.
Any stocks you're looking to rent briefly, Andrew, as you call it, renting near term?
I'd like to rent on the short side, but it's too dire in terms of the market's momentum and the volatility which you're seeing, and the kind of what we talked about before in terms of the options and how it's exploded over the past few years. Is really going to make that a little bit more difficult to kind of have your kind of shorts playing out for too long. So I'm quite happy to kind of ride this market in the momentum, but with an eye on the things that are happening outside of India, which could still come to haunt us a little bit going forward.
Okay, Andrew, final thoughts. Is our club in crisis, or do you see it coming out?
It was a crisis of players. It's a crisis of not being able to sell the club. It's just a horrible situation. I mean,
Absolutely.
it's really appalling. I don't know what to do.
Absolutely. For die-hard fans, it's really appalling, as Andrew put it.
Well, that's right, but I think I was very happy with the outcome on Sunday.
Let's not get there.
And Arsenal were the better side after very, very long.
I think we can debate that, but let's not get there.
It would be a pity if Man U came on top. But anyways, thanks so much, Andrew, for joining in and giving us your take on the markets. For the time being, we've run out of time on this edition of Editors Roundtable. We'll be back with more news and updates on the other side. Don't go anywhere.